The NASDAQ hit yet another all-time intraday high here at the time of recording this video. We've just seen this thing be a monster, and indices this year have just been seemingly unstoppable on the surface. But today we're going to be breaking down what's really happening under the surface with US indices and talk a little bit about the dollar, talk about gold and silver, and see where everything is at here as we narrow in on the big report, the CPI report on Thursday of this week, telling us whether or not inflation progress is coming in or if we are still stagnating and seeing inflation struggle. So we'll get into all of that in today's video. Let's jump in. As we get started in today's video, I also wanted to mention today's video sponsor, Vantage Markets. If you're somebody outside of the US and you're looking to trade indices, it can be tough to find the right broker that will allow you to trade CFDs that give you a wide range of things to trade. Now, Vantage is cool because with Vantage, you can trade all sorts of unique CFDs. Check this out. With Vantage, not only can you trade US indices, but you can also trade all sorts of different indices like the French futures, or you can trade German 40, or you can trade Hong Kong, the 50, right? You can trade so many different indices. You can also trade some of the more niche US ones that I really like to trade, like the small cap index, the US 2000. You can trade directly on MetaTrader, and you can trade so many different charts. So if you're interested in checking out Vantage Markets, there's a special sign up perk down below in the description for you. They have a welcome bonus that is all detailed down below in the description. So check out Vantage, and now on to today's video. So at the surface level, you would look at the NASDAQ and you would say, wow, this is a really good year for stocks in general. And there would be a little bit of misconception there, because although the NASDAQ itself looks really good, I want to show you what's kind of actually forming under the surface. And is this market really that strong? Let's take a look. So we're looking at the S&P 500, which is a list of 500 of the biggest, strongest US companies. And if you look at this chart again, you would say, wow, this looks really strong. But I want to show you an ETF that shows you the S&P 500 equally weighted. Now, let me break down what I mean by that, and it will tell you something that's pretty eye-opening. So the S&P 500, the SPY, or the SPX, which many traders are familiar with, it takes a 500 of the biggest companies, but it does not evenly weight them. It's not saying, oh, I'm going to put $50 in one and $50 in the next and $50 in the next. It's 50. It's more like saying, no, we're not going to do that. The S&P 500 weighted by market cap will say, we'll put $50 in the big one like Nvidia, and we'll put like $10 in small ones like Caterpillar. And this is not exactly to proportion, but you can see what it's saying. It's basically putting the most money in the strongest companies. And that gives you the S&P 500's final chart, which looks really, really good. But the RSP is a unique equal weighted ETF, which will show you the S&P 500 with an equally weighted portfolio, meaning you do actually put 50 in every single one of the 500 companies. And what you will notice is that this year has been largely unimpressive. If we take a look, let's go back to December, here's January. So I want to take from the beginning of this year. This is the first day of the trading year, and take a look at where we're at. The RSP, the equal weighted S&P 500 index, is up 4%. Now, that might not sound like a terrible return if you're just passively investing, but look at the S&P 500. If we take a look at the S&P 500, which is market cap weighted, let's have a look at this return since that period. You can see that it is up 17%. So the difference here is very, very meaningful. And what that's telling you is, long story short, this rally is very narrow. And what that means is that it's only a small number of companies that are really enjoying huge amounts of gains this year, and the vast majority of companies are not having a very impressive year related to that. Here's the Russell 2000. Now, I mentioned you can trade the US 2000 index with our sponsors today, Vantage. So if we take a look at the US 2000 index, you can see it's not only down on the day, but on the entire year, it's basically seen no gains. So let me actually find this. So here is the first day, January 2nd. If you take a look at this, 0% in the entire trading year so far. My point with showing you this is more thin leadership. Not all companies are feeling the party, if you will. So what do we do with that? Well, first of all, it's a bit of a red flag. In my opinion, it's not a good thing when you see, and historically speaking, it's not a great thing when you see just a small number of companies doing all the carrying of the weight. Now, if you're buying the index, you look fine because you're just kind of holding the market weighted. But this kind of narrow leadership is concerning because you need many companies to be participating for the economy to stay strong. You want companies to spend money with other companies, so on and so forth. Now, personally, I've been on the right side to a degree recently, with technology being one of my picks. Now, this is XLK. This is an ETF that tracks specifically tech stocks, which are the winners this year. Tech, semiconductors, right? Semiconductors have done very, very well. These are sectors within the stock market. ETFs allow you to trade specific components, which is why personally I love trading them. But XLK, right? The technology sector has been on fire, and it is very much, again, a small area of the market that's really pulling a lot of the weight. So, here's the thing about this. When you look at the state of the situation we're facing, this economy, is it really all that good? Well, there's some signs of strength, and relative to global peers, the US economy, I would say, looks pretty strong. But you still do have rising unemployment rate in the United States. You also have the services PMI that came out last week showing some weakness in our economic outlook. Same thing with manufacturing, which is consistently below 50. Remember that a growth rate below 50 is actually a decline. So we're seeing slowing in manufacturing. We've seen slowing expectations in PMIs for services. Then you take a look at GDP growth, showing some signs of cooling there. So there's a little bit of a concern here. We're seeing inflation also stay sticky. So here's inflation not proceeding lower, and that's why this week is so important. On Thursday, we get the Consumer Price Index, the CPI, which is the latest data point in this chart, and we'll see if we're going to see continued progress, meaning inflation moving closer to our 2% target, or not. And if we stay where we are not seeing progress for too much longer, the concern is that the federal funds rate will remain high. Interest rates will remain elevated. And if interest rates remain elevated, it could continue to bifurcate this market. My vocab word of the day is bifurcate. So look it up. Maybe we can show the dictionary definition of bifurcation.
Bifurcation, the point or area at which something divides into two branches or parts.
But anyways, we need to see the economy, the rate cuts at some point have to happen for this market to broaden out, in my opinion. Not only rate cuts, but rate cuts sooner rather than later, because if they don't happen soon, we risk seeing interest rates remaining too high too long and that restrictiveness causing a recession. Now, are we ready to rate cut? Should we be rate cutting? Inflation's still sticky. That is why it's troublesome for me and for many investors. That's why people are not super excited, in my view, for the general stocks. Now, companies that have a lot of earnings, like tech stocks, as a whole, are showing a lot of the earnings growth for the S&P 500, but the average stock is in a tough situation. The consumer's slowing down. So for me, that brings me to gold. And I keep coming back to this as where it's my safety trade right now. I've got a stop loss trailed on this. I entered back in this area. If this market does roll over today, I'll be taking a profit, but probably looking for a chance to re-enter. The reason for that is slowing economic data. In my view, a potential less correlated bet would be going long gold. And this is, of course, my opinion. As always, I could be wrong about this, and this is not financial advice. When I tell you guys my trades or my things that I'm looking at, I'm doing my own homework, you do yours. I'm not here to tell you what to do with your own money. But, I'm long. Here's a list of everything that I currently have in my account, right? I've got XLK, GLD, SLV, and TLT. These are 4 different trades that I've got active right now. My biggest position is gold. And if we get trailed out of this one, then I may look to re-enter, like I said. And if I do choose to take a new trade, it will be shared in our Discord channel, by the way. And if you're not in our Discord channel already, inside of the group, we share every trade that we're taking. So when I say we, I'm talking about Frank and I. So Frank and I have been trading things like gold, and we trade currency pairs and indices and FX. We trade all sorts of different things. So if you're not already in the group and you'd like to sign up to become a member and trade alongside us, you get access to every trade that we're taking when we take it. You can get notified by using the first link down below in the description to chat with a person on my team who can set you up with a membership. There is a price associated to it, but in this industry, you really do get what you pay for, especially when somebody shows you, live brokerages. We've made it a point that we show our real trading accounts, no nonsense. You know that when you're watching us take trades, our own hard-earned money is on the line. So if that's something you're interested in checking out, use the first link in the description down below to check it out. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.